Hello and welcome to Insurance Business TV for our second quarterly power panel looking at the property insurance market in Australia. Our experts are here. Martin Birch is Principal of Agrisurance based in Sydney. Melissa Jolly is Managing Director of Pinnacle Insurance Brokers and based in Perth. And Jen Bettridge is Clear Leader and Director at Clear Insurance in Brisbane. Welcome to you all, and let's start by having a look at the state of the property insurance right now. Is it soft or how soft is it? Jen, let's start with you. Welcome to the panel, first of all, of course.
Thank you very much. Look, I think over the last 18 months or so, it's been pretty hot in the sort of mid-market, low-tier corporate property segment. We've seen some pretty competitive rates and reductions for clients in that space. I think it's only now just filtering down into, your business insurance policies and the home insurance policies.
Melissa, firstly, welcome back to the panel.
Thank you for having me back.
Yeah, sure. Good to have you. You've described this as a softening phase.
Yeah, so the Australian property insurance market is in what I've coined a softening phase, and this is becoming more prevalent or evident over here in WA. We're seeing premium stabilisation, especially for low-risk, well-maintained properties. There's also a noticeable return of competition amongst insurers, which is always good, and this is particularly in the commercial and SME segments. However, the softness isn't uniform. So in areas with higher exposure to natural catastrophes, like bushfire zones or cyclone-prone regions, underwriters remain cautious and capacity is still selective. So whilst the overall tone is softening, disciplined underwriting does persist still in those high-risk areas.
And Martin, welcome back to the panel to you.
Hi, Daddy. Glad to be here.
Yeah, and I can't ask you a question without referring to this record flooding we're having around the mid-north coast. What's the situation where you are in Sydney right now?
It's raining a lot yet, Daddy. It's raining a lot, but it's not the kind of rain that spells danger. It's just consistent rain and sort of cold weather, normal winter weather, but it has been quite raining.
Yeah. Okay. And so, how do you see this softening right now?
So we are in a soft market from my standpoint. I think there are more insurers. There's more capacity. I think some commentators have even spoken about excess reinsurance capacity. I can't testify to that, but I think the benefits are probably more pronounced in the corporate end of the market. And I think in the corporate end, it seems as though rate discounts are on the card, provided that the losses that those properties in the big shopping centres in the corporate end, if properties have not had losses, they aren't in catastrophe exposed, they're not poorly risk management, not claims affected, then they are actually getting discounts at the moment. But I think the SME space kind of tends to follow the corporate end. We've got new and existing underwriting agencies, and they focus more on the SME space. And that increased appetite and capacity creates the conditions for policyholders to seek more favourable terms and lower premiums.
Martin, let's stick with you and then talk more about these drivers. What do you see as the main drivers behind these softening and soft conditions?
I think the first point is that interest rate environment is a key driver. So interest rates are stabilising. And it seems there's potential for a gradual reduction in rates. And I think inflation also seems to be stabilising. So with more capacity and competition in the market, I think those are the drivers beyond softening conditions.
And Jen, what about you? You sort of see interest rates as having a role in here as well, don't you?
Yeah, absolutely. I think during COVID, when interest rates were very, very low, insurance companies weren't making much money off of their external investments, and the only way they could make money was to increase premiums. So, because let's face it, they're here to make a profit for their shareholders. So we have seen as interest rates have been rising, over the last few years, that in that sort of low-tier corporate mid-market space, the insurance rates and competition really sort of opening up. And there's been new players in the market. So people like HDI Global and AXA AIG have started to reduce their minimum sum insured requirements for their large property portfolios. So I think that's definitely had an effect on where we're seeing things in that sort of low tier corporate mid market space.
Melissa, from a WA perspective, what are the drivers from there?
Yeah, so I'd say, look, there are two key factors at play. First one would be a relatively benign claims environment, particularly over here in WA. This has helped reduce pressure on insurers. Unlike the eastern states, especially Sydney at the moment, we haven't seen as many severe events recently, which gives insurers confidence to ease up on pricing. The second one, I'd say the global reinsurance markets have stabilised and capital is more available. That's bringing more capacity and competition back into the local market, especially for well-performing risks. So as a result, we're seeing some moderation in rate increases and broader risk appetite from insurers.
I guess despite the fact that the insurance market seems to be improving, there's still huge issues in the property market itself, unaffordable housing, property development in high risk areas. Melissa, let's stick with you. I mean, what's one thing the insurance industry could do to perhaps help ease some of these problems?
Yeah, look, I think the industry can play a stronger role by supporting resilient development and guiding smarter land use. So, for example, insurers could collaborate more closely with governments and councils to discourage building in high risk zones. They've got all the facts, they've got all the data. So, using that data and pricing signals to influence decisions. Additionally, offering premium incentives for mitigation measures. So, flood barriers, bushfire-resistant materials, cyclone-proof construction. So all of these can make a real difference. So by rewarding that resilience, we can make housing more sustainable and, in some cases, hopefully, more affordable in the long term.
And Martin, you see this as more of I guess, a structural problem rather than something the industry should deal with directly.
Well, I agree wholeheartedly with what Melissa's just said, but I think the focus on the insurance industry per se is not the answer. I think it's a shared public-private responsibility, but most notably policy innovation. So, to my way of looking at this, is it's structural reform. The ICA has produced 16 recommendations. That's after robust, extensive consultation and analysis. And the ingredients of a durable solution really is shared risk mitigation, smarter regulation, and innovative finance. Um, same way of answering the question in a different way.
And Jen, let's go to you finally. How do you see the wider issues in the property market?
Well, I think what Melissa and Martin have touched on is absolutely key. One of the things that I don't think the insurance industry does very well is to educate consumers. So I would like to see a lot more consumer education, and whether that has a direct impact on these property crises or whether it's more of a slow burn sort of thing, I'm not too sure. But I think really helping consumers understand what insurance policies are designed for, how insurance works, helping them educate on the different risk mitigations that they can implement, like Melissa has said. Um, and, maybe doing some more research and development into these different products that are coming out now around fire resistant materials. So, could be something to look at.
Definitely. Jen, let's ask you our last question first, and look into our crystal ball if we can. What do you see as the main insurance challenges for your customers in the months ahead?
Bottom line profitability seems to be key among all clients, irrespective of their industry sectors at the moment. In terms of their property insurance, I think it's really about helping them mitigate their property risk exposures at the moment. So we're encouraging as many clients as possible to invest in their own property surveys. They don't have to be overly expensive. and they can really help the clients understand what needs to be addressed, changed, etc., just to help reduce certain, effects of fire or risks of fire, I should say, or storm and, those sorts of things. Water damage. Water damage is a big one.
Melissa, what about you? What are your customers' main challenges?
Yeah, I think the biggest challenge at the moment is navigating the tension between affordability and growing risk, especially in the face of climate change. It's this constantly moving goalpost. So while the market is softening, many clients, especially those over here in rural or coastal WA, they still face limited insurer appetite and higher premiums. And that's predominantly due to their location or property characteristics. So we're also seeing more complex underwriting requirements evolving. So this can slow down renewals or even create a bit of uncertainty. So as brokers, it's really us helping clients understand their risk profile, give them access to mitigation solutions, but also help them to plan ahead. That's critical in keeping the insurance accessible and hopefully cost effective.
And Martin, what are your customers' main challenges right now?
Well, I find it interesting, just generally how risk management as a general theme pops up more and more, even in the SME space now. It's no longer the domain of the big corporates.
Yeah.
So, Australia's weather and climate are so-called evolving, according to the reports. The state of the climate report from the CSIRO um, uh, makes use of the term evolving. So, what that means is we're going to have longer fire seasons. That's under the fire peril. Rain, more intense rain, and heavier rainfalls, which clearly then makes flooding more likely. The other challenge is underinsurance. Generally, in the industry, we've spoken ad nauseum about it. It's the cost to reinstate a building if it's a total loss is now a moving target and harder to peg, or to repair an existing policy in the case of a partial loss costs higher. Asset values have gone up due to inflation over the last, I don't know, number of years, probably 8 years or so. So really, repair costs are higher labor costs, higher material costs. So I think underinsurance is a problem, and we've got an affordability crisis in the country. So to me, that's a key challenge for the industry going forward.
Lots of challenges there, plenty for our next property panel, but that wraps up this one. Thanks very much to all our guests, and thanks for watching Insurance Business TV. Bye for now.